Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is what is today? Today is Wednesday, the 16th, and this is your end of day recap. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. This video is for education purposes only. Yeah, I just returned from vacation. I'm kind of running back and forth doing things, so this will be a short video today, and then we'll get back at it tomorrow. So, Fed day today, a lot of whipsaw action. Once again, what we typically see on these Fed days, not every day, or excuse me, not every time that there's a Fed day, but we do see the whipsaw price action, which is exactly what we saw today. If we kind of break this down by the S&P, we'll just kind of go through that, but you can see things were kind of just deteriorating again. We are seeing this pattern this week basically, where we kind of come into the open and we see more selling than anything else, right? Right. So it was something that we talked about, in the room yesterday. But every day we kind of come into the open, and the overnight session is not moving like it was months ago. So sometimes we get this tiny move in the overnight session, and then we a couple of times we try to go a little bit higher, and then we fail for the day, and then end up going lower. So that's been the pattern, and for the first couple of hours of the day. So number one, I think that needs to change. For the market, we want to see something different. We want to see buyers coming in. Right now, it looks like more distribution days than anything else. But there's some fight to the market. So here we go for today. A move down right away on the language. Sometimes it's the other way around. Sometimes it's a move up, and then by the time the press conference starts, then the market goes the other way, right? Up first, then down. Today was the opposite: down first, and then a rebound. A little bit of an overreaction. My point of view is that, the Fed should start to kind of put a timeline together for tapering. Why shouldn't they, right? So I don't, I think these market reactions like we saw today are just an overreaction, and I took advantage and I bought a couple things for some scalp trades. The reason why I didn't really go crazy with buying the dip, other than scalp trades, is because I don't really like everything that I'm seeing right now, right? And we may work our way out of that. We are in a seasonally weak time of the year. We're in June. So you kind of have to just kind of take this with a little bit of a grain of salt. That the market is generally a little bit weaker now, right? We talked about this week that we've seen some selling every day on in the first couple of hours of the day. So that's kind of a weak seasonal symptom, I would say, right now, right? Also, if you look at advancers versus decliners today, a whole lot more declining names. One of the things what's been, one of the reasons why I've been bullish and have been basically just saying, hey, I'm following the trend here, unless I see some divergences, or unless I see something that I don't like. Well, you can kind of see for the S&P, there's 405 declining names and only 100 advancers. Same thing in NASDAQ, but not quite as much. But even the Dow, 26 down, 26 down, 4 up. So we are seeing a little bit of a deterioration. For a while it was just a rotation, right? We would see a rotation out of some areas and a rotation into others. Now it's a bit of a deterioration. So that's something that we're going to have to keep our eye on. And again, this is something that I made sure that I made a point of today in the pre-market session. This should not be a surprise, right? It should not be a surprise that June, July, August, these months are a little bit tougher, right? So definitely things to do, adjustments to make with this kind of stuff, and these are not rocket science adjustments, right? Keeping position size smaller, right? Keeping the number of positions smaller rather than trying to manage a bunch of names that in deteriorating breadth, right? Which is what we have this week. By the way, this couldn't keep going, right? If we just kind of look at this from an overall view, if we look at the advanced decline line, which has been extremely bullish, right? But if we look at the advanced decline line for New York stock for NYSE, right? You could see how far this thing has run. So from time to time we have a check back. So maybe that's what we'll start to see a little bit. Some levels that I thought were interesting for the day, both in the S&P and for Qs, right? You could see what we did here. We came down and took out a virgin point of control, right? If you look at the value areas on my charts, right, and if you hit the show profile, just so that you could see where we're deriving these value areas from, it's the volume profile, volume at price, right? So you could see this is derived from the price action back here, this particular value area, and notice that price did not pass through this point of control at all. What happens is when price doesn't do that is it leaves behind a virgin point of control, a high volume area where price hasn't revisited, right? That comes into play when we have either some selling pressure or a move outside of value to the upside. Price likes to search them out. That's exactly what happened there. Right around that Fed announcement and a little bit of reaction thereafter. Now, so nice bounce off of that. The bad news is we didn't get back inside value, right? All week this week, except for this little move down here. This was the low that we got on Monday. This was the low that we got on Tuesday. We were kind of making some higher lows. Well, not anymore, and now we're below value. So we could snap back. It's possible, but I think short-term, very short-term stuff. When we're below value for the week, right, on the 1 hour chart, I get a little bit more cautious. Also, if you look at the daily chart, we basically have to hold here. It's a 20-day moving average. If not, we're going to revisit that 50-day moving average. Again, could we break into value? We could, and we could see some downside price action. So I would be mindful of that. I've also noticed, it was kind of I was whining a little bit today. It's the price action has been tough. If your exits aren't perfect, you're kind of getting banged up a little bit. At least I am with some of my trades. A couple of things I got stopped out in. Like I said, if the timing's not perfect getting into some trades, it's just a lot of false moves, right? I was talking about this name, PGNY. Really nice looking coil here. Beginning of the day, this thing looks great. And I did take a target at this extension away from the value area, but the rest of the thing fell apart. So I only took about 25% of the trade off. And then the thing really falls apart. And I'm just seeing that in a lot of places. Not everywhere. There's definitely some outliers, but it's a tough right now. It's a very tough tape to trade. We're just not seeing a lot of follow through. Now, there are some bright spots, like Amazon, I thought acted very well today. You could see Amazon, close right around the highs of the session. You could see where this thing has been going, to the upper range. Perhaps, now that Amazon bounced pretty nicely here on the bottom of value, that was a nice bounce. Where I think this can kind of get to in the short term is 23.50. Just wait for Thinkorswim to adjust here. 34.50 and then 35.70 if you're looking for some upside levels in Amazon. I thought that was constructive. A couple other names too that look constructive to me. This Carvana, which did not break out of value, but I started a small position today. It was at the top. So, that's kind of what I'm talking about, right? We get to the top of value. Usually what we do is a little bit of digestion and then go. You could see this gets to the top of value and kind of fades back. SE is another one that I was watching today, right? Started to kind of curl back a little bit, right? After dipping a little bit this week. This could still go, but it's tough. There's a 5-minute value virgin point of control maybe that this thing can get to. But again, it's not, showing me just a ton of we're not seeing things like close on the highs, which would get me a little bit more excited. I did like this, and I started a position at the end of the day. Another one of these private equity companies looked pretty good. I liked it. So, I keep trying these trades, that I think look pretty good technically, and we'll give them a shot, and we'll kind of go from there. The energy space was also a bit interesting today. We've talked about OIH the last couple of days. Nice curl up here. Again, a little bit tough. We certainly haven't been seeing a lot of call buying in the space. Oxy is one name that I had an alert go off today. I started a position. Look at the volume today on Oxy. So, perhaps this thing can start to get out of range. Again, a little bit of a value play. The other thing that happened today was the move in bonds, right? Always on Fed days, the things to watch are the dollar, which was stronger today. That's a big move for the dollar, right? Based on the interest rate language and possibility of tapering, the dollar gets stronger. Yields usually go up a little bit. You could see that's where we are in the long-term bond ETF, right? So the 30-year bond ETF. Again, we're really not that big of a move. We're just kind of giving back some of last week's gains. So you can look at this in terms of TLT as well, right? TLT was down 9 basis points. Really not that big of a move. Now, it was up a little bit going into the Fed meeting, but overall, these are not big moves. Financials, probably between energy and financials, probably saw the sectors that saw the most call buying. There was some pre-positioning in XLF. We saw short-term calls go up yesterday too in XLF. It's at an interesting spot. Right around this 37 level, 50-day moving average would be a logical place for this to bounce. If not, if it breaks, then you got to kind of watch out. I did not do anything in this space other than getting long some KKR. Morgan Stanley's kind of my favorite one in this space. JP Morgan, I'm not sure that this JP Morgan move is done. You can see there's a virgin point of control to the downside, so we'll kind of see where that ends up. All right, guys, that's it for today's video. A quick one. Have a great night, everybody. See you tomorrow.